1,000 crore rupees in Indian markets set a new record and take the Nifty as well as the Sensex to new highs. And the booming IPO market is set to end this year with a bang. 3 IPOs will list today. And Alla Electric files for an IPO, plans to raise 7,000 crore rupees, and the EV maker is also eyeing a valuation of over $7 billion. And Paytm lays off 1,000 employees to reduce costs, says AI-powered automation will drive efficiency and will eliminate the repetitive tasks and roles. And shipping giant Maersk says that it is preparing to resume shipping throughout the Red Sea route, and says that formation of the US-led task force for protection against Houthi attacks is the most welcome news for the entire industry. Well, as far as the global markets are concerned at the moment, we're coming on the back of some gains. And in fact, the US has established an 8-week bull run, and we did see most of the US indices close in the green. In fact, the Nasdaq as well as the S&P 500 did advance by around 0.2%, and because of that, we also saw a lot of traction regarding that, of course, sustaining that 8-week bull run. Besides that, as far as markets this morning are concerned, well, they do seem to suggest that we're starting on a quiet note at the moment, considering both the US futures along with the Asian indices are currently trading flat. So it's something that we're going to keep an eye on as we move through the course of the day. But we are expecting a quiet start to this morning, not just because of the US markets but Asian markets, but also in our own markets. We're expecting some amount of consolidation. At least that's what the participants are perhaps giving us an update, an idea with. But before we go into our own markets, a quick update with respect to the Red Sea as well. We understand that shipping giant Maersk is all set to resume operations in the Red Sea, and this is of course under the protection of the US. So the US-led task force will keep an eye on these operations, and even as we understand that the Suez Canal will be due to also open to a certain extent, and we'll continue to give you an update with respect to what's happening there, especially given the fact that given the backdrop with respect to Houthi attacks. That said, as far as your global cues are concerned, we'll take a look at what's really happening with the futures and options space. Now, in terms of what happened last Friday, we did see a lot of gains coming through, and of course, based on that, we did see a little more position building. If we can actually take a look at how things are panning out when it comes to the index futures, we saw a decline in nearly 9% in open interest, and of course, we're keeping an eye on unwinding. This was perhaps on expected lines as well. Moving on to the bank Nifty as well, we are keeping an eye on a decline of as much as 17% in open interest. A lot of longs unwinding, clearly telling you that a lot of traders are now hesitant to take their positions forward. Now, as far as your options universe is concerned, for this week, we're not expecting a lot of action and largely range-bound trade. So in terms of the range, we're keeping an eye on 21,000 on the lower end, where we did see a lot of max OI with respect to puts, and on the higher end, it's the 21,500 call. So it's a 500-point range we're expecting the Nifty to move within through the course of this truncated week. So we just have 4 trading days in this week, in the final week of 2023. And in terms of changes too, I reckon we don't have too much going forward, but given the fact that we did see consolidation for the benchmarks, we did see a lot of activity around 21,200, 300, 400 in terms of their puts. Now, let's move on and talk about stocks. And that's where we are keeping an eye on Kerala Healthcare, Bata India, along with a handful of other names where we continue to see a lot of longs building up. We'll bring that slide soon. But in terms of stocks, while the markets in general were mixed, at least as far as the futures and options cues are concerned, there was largely more amount of positions towards longs. And that is evident in the kind of open interest numbers that we've seen through the course of that Friday. in terms of unwinding, we don't have too much to speak for. Otherwise, naturally, as I was mentioning earlier as well, that given the fact that we have seen, okay, so this is your unwinding coming through, and that's where we have seen Hindalco, Glenmark Pharma, and Jindal Steel looking at about a short covering, and longs unwinding for the likes of AU Small Finance Bank along with Polycap. So those are some of the names that we can keep an eye on as we move into trade this week. And of course, we'll continue to also watch out for the indices. But speaking of the indices, and from there on, we're going to talk about, all that we can, expect. We are going to talk about one particular stock, and that's Adani Power. Now, where we understand that it's been issued a letter of intent for the acquisition of Coastal Emergent currently undergoing. And let's get in Vikas to give us an update on the same. Vikas, good morning. What do you have for us?
Yeah, right. This Adani Power, along with its consortium partners, has received a letter of intent from the Committee of Creditors. The company was under this Coastal Energen. Basically, they have got a letter of intent to buy Coastal Energen. This was undergoing a corporate insolvency resolution process under IBC. And SBI and other lenders had taken the company to NCLT in 2022. The trouble started because it has a 1200 megawatt power project in Tuticorin in Tamil Nadu, where it managed to secure a PP only for first unit, whereas the second unit of 600 megawatt could not secure a PPA since it got commissioned in 2016. The lenders, especially SBI and other lenders, had taken the company to NCLT in 2022 because the company was not able to service the debt of around 7,800 crore rupees. There were a lot of cost overruns due to delay in commissioning of the project as well. The promoters of the company, especially the coal and oil group of Abu Dhabi, had also given a settlement proposal of 5,800 crores. But finally, the Committee of Creditors had agreed to the proposal given by Adani Power and its consortium partners. The deal is expected to be kind of implemented very soon. The details are not available as of now, but it is expected that after the regulatory agencies give their approval, this would go through.
All right, Vikas, thank you so much for joining us and giving us that update. A standard disclaimer that, the channel that you're watching, NDTV Profit, is a subsidiary of the AMG Media Networks Limited, which is also a wholly owned subsidiary of the Adani Group. But from there on, we move on to the next story. And this is, of course, the big one that is with respect to the primary markets. Alla Electric, we understand, has filed for an IPO. This is worth about 7,000 crores. And this is, of course, the first IPO by an Indian auto company in 20 years. Sajid Mangat is standing by to give us more details. Sajid, good morning.
Good morning, Agam. Alla Electric, one of the pure play electric vehicle company, filed its draft red herring prospectus with SEBI ahead of the Christmas weekend. It's going to be a mega issue coming in the first half of 2024. The IPO comprises of nearly 5,500 crores of fresh issue, which includes 1,100 crores portion for a pre-IPO placement that could be done before the company files the RHP and comes to the market. It also has an OFS portion of 9.51 crores shares, which includes Bhavesh Agarwal, who is the promoter of the company, offloading nearly half of that through the OFS portion there. Now, based on the current valuation which has been given in the RHP, it seems that Alla is looking at a 7,000 odd crores, which includes 13 to 1,500 crores of OFS, and the 5,500 is the fresh issue portion which is coming in. The IPO is likely to be valued at 140 to 150 rupees per share, giving the company roughly around $7 billion in valuation there. Company is a loss-making company in FY23, and they have only released the first quarter of FY24. Even there, the losses have been trimmed and revenues have gone up. and revenues are to the tune of roughly around 1,200 odd crores in the first quarter of FY24. So it's going to be a good watch on this IPO, because it's going to be one of the major IPOs that's going to come in the first half of 2024, and the 7,000 crore issue and how the market is going to react, and and it's going to good. It's also going to set valuations for some of the existing automakers, because they also are entering into the EV space, with many of them entering into an asset-light model like the Mahindras and the Tata Motors, and they will like to see how this EV play is getting valued in the market.
Okay, Sajid, thank you so much for getting us those updates, and that's the big one to watch out for, and we will be keeping an eye on that one. But on that note, it's time to slip into a short break. Don't go anywhere. We'll be back in just a bit. Welcome back. Now we put the spotlight on a handful of stocks. And right at the top, we will have KPI Green along with Century Ply, which will be in focus. Let's get in Anushi to give us an update on the same. Anushi, good morning. What do you have for us?
Good morning, Agam. So I'll start off with KPI Green, which was the focus point in Friday's trading session with the stock gaining about 3%. So two prime reasons for that. One is the company winning an order win of about 1.8 megawatt solar project. And with this, there was the fundraise which happened, which I'll delve into later. So with the company bagging out 1.8 megawatt, the company has added about 151 megawatts of solar power projects under its CPP segment, which is its captive power producer segment. So if you just take into account about H2 FY24, the company has added about 45 megawatts of its solar power projects. And with this, if we compare the H1 FY24, the order book stood at about 541 megawatt, with the highest contribution coming from its independent power producer segment of 279 megawatts, along with its CPP and hybrid segments with more contribution. We do have to keep that this is in line with the company's target of scaling its capacity to install about 1 gigawatt by 2025. Now coming to the focal point, which was the focus, is the company's fundraise of rupees 300 crore, which took place. So quite a key marquee investors names that have emerged. So first of all, just to get into the fundraise detail, that was about an issue price of rupees 1,183 compared to its base price, compared to its floor price of rupees 1,245. So in the names that we are going to mention, the first is the Quant Mutual Fund, which has about 17.01% of total issue size, with the next followed by Bengal Finance Investment about 13%, and rest if you see the likes of Morgan Stanley and SBI General with about 10 to 7% stake. We also have in the 3 to 6% range the names like Society General, GM Financial and ITI Mutual Fund. Now, coming to the Century Ply Board, Century has opened one of the biggest India's wooden manufacturing plants in Andhra Pradesh. So this was at an investment cost of rupees 950 crores, which included investment of about 700 crore for its medium density fiber board and 250 crore for its laminates and PVC segment. Now with this, what the company is expecting is another 1,000 crore investment in the second phase and a planned workforce addition of about 2,000 people for the next 5 years. So with the expansion plan, if we see, the company wants to increase its MDF capacity to 3.13500 cubic meters to 6.27 cubic meters square if we see, and the laminates would increase from 8.77 million sheets to 9.65 million sheets. So this is all a part of the company's growth outlook, wherein it expects to clock in a revenue growth of about 10% and sustain its EBITDA margins at 13 to 14%, along with this being the main one, wherein it expects to clock in a volume growth of about 25% for its MDF segment. So yes, that was all for the stocks to watch today.
Thank you so much, Anushi. Remember that KPI, along with Century Ply, both of them have had a tremendous year, a tremendous up run. But from there on, we move on to another big story with respect to another key stock, and that's PTM. And this is where we understand that the company is laying off employees in order to streamline its operations. But let's get in my colleague Rishabh to give us an update on this one. Rishabh, good morning. What can you tell us?
Morning, Agam. Paytm has decided to cut staff to save about 10 to 15% in employee costs. Now, from a stock perspective, that could very well lead to a positive move. The company has said that it was looking to save about 15% in employee costs. The company, as well as founder Vijay Shekhar Sharma, both have said that AI-powered automation has delivered more than what they expected it to. The company has not given us a layoff number, but sources do say that it is about 1,000 layoffs that is being looked at. Now, for a layoff this size, this sort of process has been going on for 2 or 3 months already, and in the future till the next quarter it will go on. So for a company this size, it's not a list of 1,000 employees that has been generated and they will be laid off. It's a slow process. People will be put on performance improvement plans, eventually let go. If, say, 10 people are hired for a certain role a quarter back, now only 2 people will be hired. So that's the sort of downsizing that we're looking at right now.
Okay, Rishabh, thank you so much for getting us those updates. And naturally, Paytm will perhaps open with some largish moves this morning. We'll continue to keep an eye on that one. And from there on, we move on to the pharma pack, a whole host of stocks which will also perhaps react to a lot of news that has been coming through over the course of the long weekend. Let's get in my colleague Varsha to give us an update on the same. Varsha, good morning.
Good morning, Agam. So let's start with Biocon. So wherein Biocon Biologics, which is a subsidiary of Biocon, has signed a distribution agreement with Sandoz. Now Sandoz will have an exclusive rights to market, distribute and sell a product, an injection basically called Adani Power. Now this is used for immune-related diseases. Now what it means for Biocon is, if you see the total global market size of this injection is almost $20 billion. Now this, the agreement is for Japan. Now, if you see the Japan's contribution to the global sale is almost 5 to 6%. That is almost $1 billion. Now, the other thing is because this is an off-patent product, after 50 to 60% of price erosion, the opportunity again goes to $500 million. Now, considering 10% market share in Japan, the opportunity size for Biocon will go to almost $50 million. Now, because they have to share this profits with Sandoz, which is in Japan, the revenue for Biocon will be almost $10 to $15 million per year. Then next we have Zydus Life Sciences, wherein they have received 6 observations for its API facility in Ahmedabad. So the inspection was from December 14 to December 22. Now if you see, there were no data integrity issues, and what it means for Zydus is, because this observation may actually affect the formulation sales, because the API facility, the API is used for the captive consumption, which is used for making the formulation. So if warning letter comes, this may affect the formulation business for Zydus, which they export to other countries. Then lastly, we have Aurobindo Pharma, where it has received 10 observations for its new facility in New Jersey. Also, inspection was conducted between December 11 to December 22, and this facility is yet to start the commercial operations. So because of this observation, this observation actually may extend the plant monetization for this facility. And if you see, the Yugia Pharmaceutical Specialty Group almost has 156 ANDA approvals, and they aspire to reach $650 million of global ESPG revenues in next year.
All right, Varsha, thank you so much for getting us those updates. Of course, all those pharma stocks will stay in focus, starting off from the word go. And from there on, we talk about the primary markets. We have 3 big listings today. Of course, one of them is Mothisons. Besides that, we have Muthoot Microfinance along with Suraj Estates. And now we have my colleague Saloni Kothari to give us an update on that one. Saloni, good morning.
Good morning, Agam. Yes, as you mentioned, 3 companies are going to be listing today. They had their IPOs last week, and as per SEBI norms, from December, all the IPOs will be listing on the T+3 days. So that's why we are seeing such quick listings as well. So Mothisons Jewellers, as you mentioned, is going to list today. The 151 crore issue was oversubscribed over 159 times. It was led by NIIs and QIBs for that matter, and the price is set at the upper band of rupees 55 per share. Another listing that one should be watching out for is Muthoot Microfin. It's a Kerala-based, microfinance company, and the issue was about rupees 960 crore, which was again oversubscribed over 11.5 times. The price is set at rupees 291 per share. Suraj Estate Developers is a Mumbai-based, real estate company which specializes in residential and commercial projects. So the IPO was of rupees 400 crore, and the issue was oversubscribed over 15 times, and the upper price band is set at rupees 360 per share. So it will be very interesting to see as to how these companies list today at NSE and BSE, and exactly at what premium.
All right, Saloni, thank you so much for getting us those updates. We'll keep an eye on how these listings come through. But with that, an update also on the COVID situation at the moment. And we understand that that number of active cases has inched higher. We now have a record and a single day rise of around 628 new COVID-19 cases at the moment, while the active caseload has jumped to around 4,054 according to the Union Health Ministry data. Now, 622 new cases of corona have been reported in the country in the last 24 hours with one fatality. Moreover, 34 cases of JN1 variant confirmed in Karnataka, of which 25 of them are at home and they are recovering. Others are in the hospital with comorbidities. 170 samples were sent for the genome sequencing, and the Karnataka government has recently constituted a 4-member cabinet subcommittee headed by Rao of COVID-19 management. And from there on, we move on to another important story, and this is a major one because this involves Ensys, where we understand that with respect to one of its memorandum of understanding, that's at the moment in challenge. Let's get in my colleague Hemansh to give us an update on the same. Hemansh, good morning.
Thanks, Agam. So, Ensys has over the weekend informed that its deal for $1.5 billion that was inked over a period of 15 years and signed with the AI company has failed to pass through after the MOU that was signed back in September. The master agreement is has not arrived at its culmination, really. And while this reflects an increasing pressure on IT companies, signaling the pressure that they're seeing in terms of the demand outlook, which has been muted for the past 3 to 4 quarters. Interestingly, though, this also comes nearly 2 weeks after the company's CFO, Mr. Nilanjan Roy, resigned suddenly after being associated with the company for nearly 6 years. And what analysts have been highlighting since the previous quarter as well is A, the muted demand outlook, and secondly, the fact that you have large total contract values that are being signed by these IT companies, but the annual contract accretion is much lower, signaling that deals are spread over a longer tenure. Ensys is expected to be under pressure on account of this news.
Hemansh, thank you so much for getting us those updates. And Ensys, of course, will continue to be in focus. We'll have to wait and watch whether or not that will in fact drag the IT index downwards and perhaps put some amount of resistance as far as the benchmarks go. But with that, it's a wrap on this edition of All You Need to Know. On the other side, India market opens up next. Stay tuned in.